Hey, everybody, welcome back to another beautiful day in real estate. Today, we're going to be talking about a few different things. We're going to talk about some stuff that's exciting that's coming to the Fannie Mae and Freddie Mac. We're talking about some new stuff when it comes to Zillow previews, and we're also going to be talking about how ChatGPT is sabotaging some deals. And finally, if we have a little bit of time left, we're going to talk about choosing the right lender as a buyer's agent and buyers, why it's so damn important for you. So let's jump in as we always do. First thing, interest rates, they are now ticking below the 6.5s today. We're seeing some positive movement after a big spike from the 5.9s to the 6.5s. There's not really a bunch of news that's really coming out right now. We're seeing that the 10-year Treasury bond is starting to make its way back down again. But it's slow moving. I mean, the big thing that we are going to, like we said, the biggest conversation we're going to have to be having right now is what does the market look like based off of the war in Iraq? And until we get some more certainty there, things are just going to kind of do their thing. So I'm just pulling up the U.S. Treasury bond. U.S. Treasury bond, you guys, we haven't seen. I mean, it ticked up a little bit yesterday. I didn't even see that. Ticked up a little bit. We did talk about how it could bottom here. We might see a little bit of volatility moving up. The stochastic, again, from a technical analysis, this could be wrong, but because it's bonds, not stocks or crypto. But let's see here. Let's go. I mean, hypothetically, if we're talking about from a trader's perspective, let's zoom back out. Trader's perspective, we saw a trend line where it bounced off 1, 2, 3, and then fell through. If we see a retest, it could be heading down. If that's the case, I mean, these technicals are kind of pointing towards that potentially happening. The stochastic is way overbought right now. Again, when it comes to bonds, it just depends on the news that we're really seeing. So right now, it's kind of uncertain. I would say the technicals say we could be moving down, which is good for the summer market. I think a lot of people really want to get into real estate this year. I just feel like a lot of people feel like they can't. Which is why we're going to kind of roll into the lender perspective at the end of this. But anyways, moving forward, Fannie Mae, Freddie Mac to accept crypto-backed mortgages for the first time. This is a Wall Street Journal that came up with this $4 trillion, blah, blah, blah. National Mortgage Association to accept Bitcoin-backed mortgages. You guys, this has been in the works for some time. It hasn't been public. It hasn't been something that's been backed, but there are companies out there that are leveraging Bitcoin to buy real estate. And this is where we have to look at the futuristic perspective when it comes into real estate. Just like everything else, it's going to evolve. Just like the banking system's evolving faster than a lot of people realize. There was companies like Kraken, we've talked about that, where they are now access to the public funds or the public banking system, mortgage-backed securities, good Lord. It's been a morning. Bitcoin-backed mortgages are going to become more popular as we move forward into the next couple of years. There is something right now called the Clarity Act that is being worked through at the Senate's level right now. And once that passes, because it will inevitably pass, we are going to have a clear regulatory framework for cryptocurrency and blockchain. Now, a lot of people are still battened and bruised from the last bull run because a lot of people got into the gambler mentality. And they held the bags way too long and they got just absolutely abolished. But the thing that we need to pay attention to is now there's becoming actual regulation behind it. And when there's more regulation and there's more certainty, investors are going to move their money. Now, this is why I'm very bullish on cryptocurrency and blockchain as a whole. Not necessarily real estate related right now, but it is important that I think is going to factor into real estate. So what we're looking at is that banks are going to be going to a point where they don't have to create liquidity to accept a transaction. What this means is like if you're transferring money from Chicago to Sweden, you have to have publisher clearinghouses in between, and that bank who's receiving the amount of money has to have that money on their books, right? So you have $1 million getting sent here. It has to go through 1 clearinghouse, 2 clearinghouse, and then to the bank where it settles 48 hours to 72 hours later, weekdays. So if you send it on Friday, you're not getting it till Wednesday. It's not settling till Wednesday. Clunky, slow, and it's not something that the modern world can tolerate anymore. That's why we're seeing banks starting to work towards a digitalized blockchain. And if you dive into that, it gets more and more fascinating. But without going down the rabbit hole too much this morning, what we're going to see is they're going to create a transaction base where they can send money from here to here and settle it in under 3 seconds. And not only that, it's not going to be a 6% fee, 8% fee like it is now. And The thing that really kicks it, because right now, what's the biggest issue? Liquidity, right? Everybody says the money printers are going to get turned back on. They could. They very well could. History says it should. But we get to a point now where you don't need that liquidity on hand to transfer money. That liquidity goes back into the world, right? You digitalize all these assets, which is happening now. I know that. I know for a fact digitalizing gold, silver, oil, all these things are now starting to get digitalized. But we talk about digitalizing real estate and all those things. Imagine a world where you can transact and you can settle a payment instantly. And if you're in a banking system with AI being able to optimize the transaction base for a loan application so that a lender can then approve you in less time, so you can transfer money in less time and close on a home in less time. All right. Not only that, but you have all this liquidity coming back into the economy. It was an insane amount of money that was held at banks across the world. I know I'm wrong, but it was like 11 trillion. I know it was at the T, and I know it was above $10 trillion that is being held at banks so that banks have liquidity. So when money gets transferred, they can accept the payment. Now imagine $11 trillion just going back into the economy, going back into trading, going back into real estate, going back into hard assets. That's what I don't think a lot of people are paying attention to. So when I see something like this, where Fannie Mae is to accept crypto-backed mortgages, this just means that we're one step closer to the next process, right? Government-backed mortgages, giant Fannie Mae will allow Bitcoin and USDC to be considered in mortgage underwriting for the first time through a program with Better Home and Coinbase. Okay. That means that they're going to, when they go look at your debt to income ratio and your assets, they're going to say, oh, you have Bitcoin, you have USDC. Perfect. Those are good assets. That's where it's going to make a big difference. Somebody like me, I buy Bitcoin every single day, 365 days a year. You want to know why? Because again, when we talk about money, people think you need all this money to invest. No, you need $5 a day. I buy my other investments on Friday, every Friday, but I put $5 into Bitcoin every single day, because think of it this way. Most of you out there are on your way to work. You're getting a $5 coffee. You're getting a $5 sandwich and probably tipping $3. You're paying $18 a morning to go get coffee, have a breakfast sandwich. Okay. Imagine just not getting a sandwich, or maybe just not getting a coffee, and you have $5. You put it in there. My return on this on averaging is like 30% right now. So buying into an asset, again, this is more off the lines of real estate, but buying into an asset and consistently putting like $5 in there a day. I mean, you're 5 times 5, 365. Geez Louise, what are we at? Like 15 grand? No, not 15 grand. We are at like fudge. I don't even know. I'm going to do some quick math real quick, because I know I'm wrong, and my brain's just not firing on all cylinders today. So let's see here. 5 times 365. So you're putting 15 grand. You're putting $1,800 a year into an investment, and you just had to stop drinking coffee in the morning. I mean, make coffee at home, dude. Go grab some milk or cream or whatever, make it at home, and you save yourself a bunch of money. You can start investing. Everybody makes it sound like you have to have thousands. No, you don't. You just have to have a good plan. Anyways, we're going to see a lot more consistency in these markets, where they're going to start to transition to different crypto and blockchain related. And I say that differently because crypto and blockchain can be separate things. Cryptocurrency is going to be something like Bitcoin. That's going to be currency. It's going to be fluent. It's going to flow, right? Blockchain is data that's going to be a blockchain is something where each block has data that's saved permanently on the blockchain, and something that can't be messed with once it's closed. So again, we're focusing on a different era of the internet and an evolution of the internet, right? That's what AI is. That's what cryptocurrency is. That's what blockchain is. And just like everybody had a huge panic talking about how the world's going to end because internet took over, the same people are having the conversation about AI. Now, don't get me wrong. There are some things about AI that make me nervous, but we're creating a more efficient world. We are creating a more productivity world with less people. So that being said, that's actually really exciting news for those of you that are investors and are trying to get into the real estate space, because now you can start preparing to use that cryptocurrency as a risk-off asset, right? It's a risk-on, risk-off asset, but it's a risk-off asset in some cases, and we'll dive into that another day. But just goes to show that, dude, I get the volatility is high in it, but right now I'm more confident in Bitcoin than I am in the stock market. I'm more confident in cryptocurrency and blockchain than I am in the systems we use now. The banking systems we use now are clunky. They suck. I mean, if you know what goes on behind the doors, you probably would feel a little uncomfortable as well. Talk about bank runs, talk about things like that. They passed the Clarity Act, which right now the biggest argument is yields. Banks are lobbying against you being able to make money on your money. So right now, I can go put my money into Coinbase and your USDC, and USDC can give me 5% returns if I lock it up. So just like a high yield savings account, except the difference is I can take it out whenever I want. I'm not locked into a certain period. Banks hate that. Number two, I can use them as a bank if I really wanted to. I'm not saying I feel comfortable yet because there's not that clarity there yet. So I have money in there, but I don't have a lot. I don't have my life savings in there. But imagine a time where you can just get, because right now you can get paid from your job into Coinbase, take that money in Coinbase, you can pay your bills. And then on top of that, because you can get a credit card, you can get a debit card through Coinbase, and you can make 5% interest on your money. Right now, inflation is 2.7%. You're making 1.3% a year on your money. You're not losing it, you're gaining it. And that's what banks don't like, because banks don't pay you literally fuck all to have money in your account. They basically give you 0.001%, 0.002%. And when banks told me this, dude, I immediately found a new place to put my money, because I didn't know this until I was a young adult, probably 20, 22. I sat down and I said, what can you offer me by me putting my money in your account? And this guy excitedly, not his fault, but excitedly, he goes, yeah, we offer 0.02%. I was like, inflation's 3 on average yearly. And he goes, uh-huh. I'm like, so I'm losing value by staying in your bank? Well, you could put it into bond. He didn't know what to say. That's the difference between wealthy people and unwealthy people. We put our money in the bank because we think it's secure. But in reality, it's really not that secure. All it takes is a bank run, which we've seen in a couple banks over the last few years, and your money's not able to get pulled out. I have a lot of money put into cryptocurrency because, yeah, there's risk there. But at the end of the day, if I had a bank run, I'd be just fine. And that's what's important, right? We have to kind of secure our families. But that goes along with my principles. Is believe I have to protect my family spiritually, physically, and mentally. And right now, the physical aspect is we live in a very uncertain world, so we have to kind of prepare for the uncertainty ahead. So when it comes to this, and I know it kind of just went off on the derailed there, but right now, you guys, we are going to see digitalized real estate. We are going to see digitalized assets, and we're going to start to see Bitcoin become more pertinent in your investment strategies. Big investment firms are now saying you should put 3% of your money into Bitcoin. Now, the thing is once that Clarity Act is, and we'll kind of circle back around, but the Clarity Act is very, very important for us, because right now there is companies like Coinbase. I'm going to reference them. They're the most known. They are saying, hey, we need to be able to provide value to these people that have money in our accounts. Because what happens is like I said, banks are pushing millions and millions of dollars to bring that out of the Clarity Act and saying that we can't get a yield. Banks don't want you to make money on your money, because then that destroys their business policy. But the difference is once we have that regulatory framework, I don't think we're going to end up with yields. I just don't. I think there's too much money. I think there's too much power behind us being broke in a system to see it. But what I do think is going to happen is that crypto exchanges are going to become banks, and those banks are going to create liquidity for markets, which I think is going to drive up hard assets. And I do believe that Bitcoin is going to be a hard asset. I do truly believe that, because 4 years ago when I was investing into it, I didn't know, man. I didn't know. I just thought I thought it was a waste. I was investing in a lot of really uncertain stuff, just betting my money like I was playing roulette or blackjack. I know what I'm invested in now, and that's why I buy it every single day, because again, I'm putting that in, plus I'm putting whatever else I put in every couple weeks, every week, and my portfolio is just growing by the month, even down markets. Okay, and we can get into other ways to protect your family, but right now we're talking about blockchain, so we're going to stay there. But you have a lot of opportunity for growth in this market. Everything seems terrible, and people are very scared. But this is the perfect time to turn off your phone, to stop doom scrolling, to stop watching Netflix every single day, and to get down and say, hey, this is what can happen. This is how we can set our family up. I talked about it before. Dude, my job is hard. I spend 70 hours a week in the office. I see my kid a couple hours a night, my wife probably a little bit more. But I'm setting my family up so when the time comes, my family is going to be taken care of. And that's my little spiel on that for right now. So The next thing, you guys will jump back into real estate. We're going to talk about the Zillow preview again. So Zillow preview announced 24 additional brokerages have signed in accordance to the latest news. They already had signed these 3 before, so now these are some names, but they're not huge names. You have Vanguard Properties, I guess that's a big name. Berkshire Hathaway Properties. I don't know though. Some of these are going to be more local or centrally located towards their locations, but what my whole point of this is, we'll read this first. Zillow preview was just announced, but the signal from the industry is undeniable. Brokerages and their agents want early marketing option that's public, transparent, easy for consumers to find, not hidden behind a private gate. This level of early adoption shows we're building something that aligns with their market, or the market where the market is headed. And this was the chief executive officer of Zillow. And you guys, we're just moving into an evolution of real estate. That's all this is, right? It's again, things are shifting from the old to the new, and the new right now is being as exposed as possible. Before, as a real estate agent, you just had to be good at your job. You had to list it for a correct price. People would pull it up on the MLS, and then they would come out and look at the home. Now we're in a time where you have to be as exposed as possible. It's part of why I started doing YouTube, is because you have to be as exposed as possible, and a lot of agents don't. You can still be successful and do it the old-fashioned way, but why would you do it the old-fashioned way if you have the opportunity to do it the new way? This Zillow preview is going to be a big thing, because the big thing that you can talk about is real estate agents can now have a testing period for the price on a home and say, hey, the market didn't react correct, guys. Like the big one is people that say, well, let's just list it here and see what happens. Now you can put it here if you really want. I won't be letting my buyers do that or sellers do this, because it's more important for me that we sell the house, but we can just list it here and see what happens. You have a week period or whatever the time frame is to say, we got 40 views and 2 saves, man. You should be at 50 right now and 2,000 views. Like, nope, we're listing it where it should be, right? Sellers, agents, you can use this to your advantage, or you can use this to cost your buyers money or your sellers money. It's totally up to you. We've talked about good versus bad agents, but anyway, it's important for you to really know what this means for the market, especially in your local market. North Dakota, Bismarck, dude. Like I said, we have 1.8 months of inventory. That is absolutely astronomical. So even like properties that are being listed right now, they are just getting bought up like crazy. You have price points 650 to 900,000 is pretty slow, but above $1 million moving like crazy. Below 500,000 moving like crazy. So understand your market, understand how you can utilize these tools to help your clients. Sellers, ask your agent about this stuff. It's super important. All right, last thing we're going to touch on, you guys, how ChatGPT is sabotaging real estate deals. So I kind of glanced through this article, but I see the issue without even having to read the entire thing. The problem is that Ryan Serhant, I don't know if you guys know him. He's a big time agent out of New York, big agent. But a $50 million deal went to a ground halt because buyers are asking ChatGPT on advice on how to offer the property, and ChatGPT is offering advice on how to price their property. The problem is you have a yes man mentality when it comes to ChatGPT. I will be switching over to Claude. Claude is a lot better, but ChatGPT is like your best friend because he agrees, she, whatever, it agrees with literally everything you say. You can be like, I ate 4 cheeseburgers and I'm not losing weight. You're like, you're doing the right thing. Just go for a walk a little bit more. Like it's not something that's really helping people in that aspect. I mean, it's beneficial. I used it a lot, but now ChatGPT is being utilized more as a tool rather than a questionnaire. And the problem is that ChatGPT pulls data, and the thing that a lot of people don't know, but ChatGPT only pulls data that it can find, and if it can't find the information, it just pulls it out of its ass and creates something. So it's important. People might be able to pull the information if they use the right SEO words and they use the right description, but the problem is most people are going to say, my house's address is this, what's it worth? And ChatGPT might pull a number out of its ass, and it could be close, it could be wrong. So again, you have to be able to explain to your clients, buyers, sellers, what this means, and deals will go through. People are going to cost, agents that don't know what they're doing are going to cost deals because their buyer's going to come to them and say, ChatGPT said this, and they're going to say, let's give it a shot. That's not how it works, man. That's just not how the market is. So that was my last thing to touch on. We were going to talk about lenders and choosing the right lender. I think we'll talk about that tomorrow when we have a little more time, but the market's evolving. Buyers, sellers, agents, get your shit together. We got stuff to figure out. We got a lot of things that we have to learn, but it's important that we know what we're doing. So if you have any questions about the video, I know we were kind of all over the place. Comment below if anything I dove into, I didn't explain well enough. I'd love to see what I can do. Have a great day. Thanks for watching.